I've been talking to quite a few insurance companies and advisors recently because I've been concerned that perhaps we've taken our eye off the ball when it comes to what group risk insurances are really there for, so income protection in particular. We focus so much on prevention, and that's brilliant. I think that's really excellent, the work that's been done, that perhaps we've left the rehab side behind for a bit. And when you look back at it now, those rehab services have been around for 10, 15 years, and they're absolutely invaluable. But are they fit for purpose in 2019? I'm thinking particularly of mental well-being claims. Are insurers looking at their processes and how people claim on the rehab side? I've certainly spoken to quite a few insurers who are beefing up the clinical provision they've got behind there, how their claims process works, but there are a number of others that I've been hearing about in the market who haven't quite kept up with trends in the market. So I think there's room for those group risk insurers to look at the rehab and re-look at their claims process and think, is it fit for purpose in 2019? But keep the prevention stuff going. We're in the right direction on that. I've had some quite intriguing conversations with advisors and brokers who have flagged up to me that not all insurances are the same. Quite often, group insurance and what they offer and promise an employer look the same on the outside, but they know who's got the good quality services behind them and who haven't. And it makes a difference, and I think employers need to think about quite carefully what they are buying. This is not just what's cheapest on the market for a procurement department to deal with. You've got to have that knowledge of what's being offered and why you're buying it. Are the rehabilitation services being offered robust enough for your organisation? Are you buying 6 phone calls from an EAP but they can't actually deal with an employee who's perhaps got severe anxiety or severe depression, where those people actually need a face-to-face clinical practitioner? I'd say there's a lot of room to look under the bonnet of what you're buying and beyond the price of what you're paying for it. The EAPs I've mentioned there in particular, there's a huge range from your premium EAP, which is still not that expensive per employee per year, and what they will get if there really is an issue and a mental well-being issue, versus a tick box, we offer an EAP, it's come free with another product. And be aware of that, because you could get caught short and undermine your well-being program as an employer if you don't realise that you haven't got what you think you've bought. What I've also found interesting is having a look at some of the data on which insurances employers spend the most on. And when you actually see it in a graph, you realise that something like private medical insurance is very, very popular among employers, and a lot of money is spent on that, particularly for senior staff. And that's the clue. Suddenly you realise that insurances are sometimes being bought because that's what staff are asking for, not based on what that workforce needs. And I think if you were looking purely at workforce need, you'd perhaps see more people buying group income protection to make sure that all of your staff are covered, right down to the lowest paid, who often fall through the cracks and don't get the support they need.